In 2024, Canada finally secured a direct oil route to Asia with the Trans Mountain Pipeline expansion. But just as the ink dried, a curveball, Trump slapped a 10% tariff on Canadian oil and gas. Then, China made its move. Rongsheng Petrochemical set up shop in Calgary, striking a crude deal with Suncor. What seemed like a routine trade shift might just redraw the global energy map. Let's break down the power plays, shaping the future of energy.
If the U.S. has become an unreliable trade partner, where in the world does Canada seek new trade deals?
Welcome back. Amid the U.S. tariff war, China's ambassador to Canada says Beijing is interested in increasing trade with Canada.
China's power move, Rongsheng strategy in Canada. Rongsheng Petrochemical, a massive refinery that processes 800,000 barrels a day, is now looking to expand into North America. Their latest base of operations? Calgary. While others were waiting for the right moment, Rongsheng didn't hesitate to make its move, seizing the opportunity presented by the ongoing tensions between Ottawa and Washington. Its opening move? They made a deal with Suncor, a big player in Canada's energy sector, to supply crude. And they're not just talking. The first shipments are already set to land in China this June. But this isn't a one-time thing. Rongsheng is teaming up with big players like Cenovus, Canadian Natural Resources, BP, Shell, and ConocoPhillips. The real game changer? These aren't your typical oil deals. Rongsheng is banking on FOB, free onboard contracts, which give them the power to reroute shipments at a moment's notice. In other words, they're not just buying oil. They're calling the shots on where it flows. Wang Kia is a seasoned oil strategist who's at the forefront of this energy push. He used to head up PetroChina's Canadian trading operations. With Wang Kia at the helm, Rongsheng isn't just dipping its toes in. They're diving deep into Canada's energy sector, full throttle. And this wouldn't be possible without a big change in infrastructure. So, let's dive into the backbone of Canada's energy pivot, its game-changing pipeline project. Trans Mountain Expansion, Canada's direct pipeline to Asian markets. The Trans Mountain Expansion (TMX) project is at the heart of this energy shakeup. They finished it in early 2024, and it's not just an upgrade. It tripled its capacity, going from 300,000 to a whopping 890,000 barrels per day. This pipeline stretches nearly 1,200 kilometers from Alberta to British Columbia's Pacific coast, and it's given Canadian producers a direct lifeline to Asian markets. For a long time, Canada's only major customer was the U.S. Over 95% of its crude exports went south, which meant that Ottawa was vulnerable to changes in pricing and now tariff threats. But TMX is changing the game. With a direct route to the coast, Canadian producers can now ship oil straight to China, Japan, and South Korea, markets that actually prefer Canada's heavy sour crude, perfectly tailored for their refinery setups. Of course, there was pushback. Environmental groups and some Indigenous communities raised alarms over ecological risks and lack of consultation. But the federal government, after buying TMX from Kinder Morgan in 2018, doubled down, pouring in billions and pushing the project forward. Now the pipeline is up and running loud and clear, a new express lane reshaping Canada's role in global energy logistics. But infrastructure alone isn't the whole story. Shifting policies and tariff threats have forced Canada to rethink its entire export strategy. Let's take a closer look at Canada's big move towards Asia. Before we dive in, we'd love your support. Hit that like button and subscribe. It helps us bring more deep dives on global power plays straight to you. Now, let's chart the next course and explore what's driving Canada's big energy shift. Canada's energy reroute, shifting from U.S. dependence to Asian growth. Why is Canada turning to Asia? It's all about tariffs. Trump's 10% tax on Canadian oil and gas wasn't just some random policy move. It was a wake-up call. In 2024, Canada exported about $176.2 billion in energy, and a whopping 97% of that went to the U.S. That level of dependence left Ottawa vulnerable. So what's the fix? Diversify and fast. The federal government put together a $6.5 billion support package with $5 billion to help exporters break into global markets and $1 billion for agriculture. But industry leaders weren't sitting around waiting for it. Now that TMX is up and running, Chinese refiners like Rongsheng are lining up, ready to get a steady supply. Natural gas is also entering the mix. LNG Canada is set to begin exports by the end of 2025, opening up new trade routes to Asia's fast-growing energy markets. And it's not just industry players making moves. Politicians from all sides are supporting the shift. Conservative leader Pierre Poilievre is reviving shelved projects like Energy East and Northern Gateway, while Prime Minister Mark Carney is looking north, exploring Arctic routes to tap European demand. The message is clear. Canada's energy future is no longer tied to one partner. It's stepping onto the world stage with a vengeance. But as Canada expands its reach, tensions are rising across North America. Let's break down the trade pressures and power plays that are shaping this new energy landscape. Oil as a power play, North America's energy battleground. Canada's growing energy relationship with China comes at a time when North American trade is under increasing pressure. Tariffs, political posturing, and tit-for-tat tactics have transformed oil from a commodity to a strategic asset. For years, U.S. refineries, especially those along the Gulf Coast and in the Midwest, have relied heavily on heavy Canadian crude, importing nearly 4 million barrels a day. But Trump's tariff threats could throw a wrench in that steady supply. Canadian officials warn that U.S. gas prices could jump 75 cents a gallon if tariffs go into effect, forcing American refiners to scramble for more expensive alternatives. And that's not just a refinery problem. It could send shockwaves through the entire economy. Ironically, even as Canada and China clash over issues like EVs, steel, and agriculture, oil remains untouched by sanctions. It's simply too important to both economies. Crude has become a rare neutral ground in an otherwise tense relationship, and business is thriving. In 2024, China boosted its Canadian crude imports by 22%, hitting 184,000 barrels per day. With LNG projects ramping up and new trade routes taking shape, Canada isn't just a supplier to the U.S. anymore. It's positioning itself as a rising global energy powerhouse, juggling business with geopolitical strategy. But oil isn't Canada's only trump card. Let's turn our focus to the next major player in this evolving energy portfolio, natural gas. Expanding horizons, Canada's future in LNG and beyond. If oil is the main event, natural gas is Canada's breakout star. The mega project LNG Canada, based in Kitimat, British Columbia, is gearing up to ship its first exports by the end of 2025. Backed by a powerful alliance that includes Shell and PetroChina, the project marks Canada's big debut in Asia's fast-growing gas markets. Currently, Canada exports about 8.6 billion cubic feet of natural gas per day, almost all of it to the U.S. But that's about to change. With LNG Canada on track and other potential projects targeting Arctic and Atlantic routes, Canada is gearing up to tap global markets on its own terms. Canada isn't just looking at short-term deals, it's laying the groundwork for a new energy strategy in a post-American trade landscape. And now, we're entering the final stretch, where all these shifts are coming together to create a new global energy map. The big shift, Canada's energy map gets redrawn. It's not just about oil deals or new pipelines, it's a global energy shakeup. With Rongsheng setting up shop in Calgary, TMX pushing westward, and LNG gearing up for export, Canada is moving from sidekick to frontrunner in the energy game. The US may soon face higher prices, while Asia secures a reliable supplier. Canada is positioning itself to win big. So what do you think? Is Canada really ready to go global with its energy? Will China overtake the US as its top customer? Will tariffs help or hinder these partnerships? Can LNG become Canada's long-term energy powerhouse? And how should Canada balance its energy ambitions with its environmental responsibilities? Share your thoughts in the comments, and don't forget to subscribe for more updates, deep dives, and industry insights. Thanks for tuning in. Until next time, stay curious and stay fueled. Feel free to check out any of the videos on the screen. There's plenty more to explore.